Hey guys, welcome to another Trade Genius podcast. I have my good friend Bob Kudla here. Guys, the jobs report came out and they're gaslighting us. We're going to tell you why we think the recession is definitely coming, and we have some data for you to look at. Let's dive in.
Trade Genius.
Okay, Bob. So if you look at the numbers that came out today, it looked like jobs just smashed it. And, market obviously was down if you were paying attention. But the reasons for that were because then the Fed doesn't ease as quickly and the market's not liking that. But then if the jobs data is correct, we shouldn't be seeing a recession. So what's going on?
Yeah, I hate this report, Phil, because it's the most manipulated report of all the reports they manipulate. And so they count if you had 10 jobs that you work 2 hours a day on, they would count you as 10 people employed. And so really, the household survey is what you really want to look at, and also you want to look at full-time equivalent. Before I show you the data, I just want to tell you what's really happening here is that we're at an inflection point. Trump's going to be taking over. Okay, so they've been running up the 10-year yield, right? And that's running up the dollar, or the dollar's running up the 10-year yield. We don't know which one is chicken and which one is egg, which is then driving up energy costs, okay? Because energy kind of goes with the dollar and it goes with the rise of yields. And today, what I think was the cataclysmic. They popped oil $3. They dropped, SPY down 10 points. And for me, big money needs these catalysts to get out of the way of their positioning. So I think today, Phil, we're topping in the dollar, we're topping in oil, and we're bottoming in the markets. And then we're preparing for the recession trade. And let me throw that up, and then I'll give you the floor. So this is full-time equivalents. Okay, does this look like a rip-roaring employment market to you, Phil?
Nope.
Absolutely not. And so what's happening here is that you're losing one job and you're replacing it with two part-time jobs, and they're telling us the unemployment rate's down at 4%, which is just a total joke. And so if you're really truly a policymaker, you'd be looking at this data differently than if you're a politician. And what they're trying to do here is Wall Street knows a recession's coming. And if you're long oil and in a recession oil goes down, what are you going to do, right? You need to pop oil to pop the stop so that you can get out of your oil position so that they can roll over. If you're short the market because the dollar's going higher, you're gonna try to push it down so that you can make a trade there too. So in my view, Phil, is I think Santa's finally showing up, and apparently he has orange hair. And so we're gonna get the Trump rally with Trump. I guess this is part 2. And then I think after maybe next week or two, then we can evaluate what it's gonna look like for earnings coming out, starting, next week or 2 weeks from now, and the guidance they're gonna give. So we may have a 1 to 2 week pop here, Phil, before we really roll over it into March. I'll throw it to you.
Yeah. So again, like you alluded to, the jobs data is just they twist it so many different ways, but I think you have to look at two things now. You have to watch household survey, right? Because that's telling us a different story. That's telling us that, people are starting to feel the effects of a recession environment. And I think full-time employment, which is what this graph is telling us, is already in a recession. Full-time job market is already in a recession. So this will eventually be priced in, but you have to get through an event called the inauguration. And that typically is a key point in the markets. And so you can't really pack up and leave and go home until we get past that. So I think, funny thing, we thought that the markets would, or at least I thought the markets would run up into the inauguration. The problem that you get, and this is why it's good to monitor Twitter, is that the herd kind of all started to latch on to that talking point, that narrative. And usually when that happens, then it's not so much a straightforward move. So because you want people doubting that move would really follow through, but there's too much bullishness, and it's kind of too obvious that move started to happen, and that was the likely destination. So what did we get? Well, we got a little bit of a front run on that. Remember, we talked about these markets potentially putting in a top in 2024, which that's the one thing people weren't looking for. And it still could be the case because we really have not challenged even the 786 level in either Bitcoin or the S&P 500. We've fallen short of that. And it could still come and be tested and still be a lower high. So we could still run up there and everybody could get all bulled up as we get back, Bitcoin gets back up to like 105 and things like that, S&P 500 near all-time highs, and still not give us a new all-time high that would green light what I would expect to be a bit of a longer rotation beyond the inauguration that could possibly maybe run us into early February. But make no mistake, whatever we do, if that does or does not happen, we're putting in a top, in my opinion. So don't fall in love with these markets. Enjoy the last of it, because I think ultimately this graph and household surveys is the real story behind the jobs market.
Yeah, and look, a couple things too. Also, Bitcoin's been sniffing this out too. Bitcoin doesn't like a really strong dollar either. It doesn't like the liquidity. Remember, Biden's doing everything he can to sabotage Trump before he gets in office. Next week, Trump's Treasury Department gets the hold of the levers, and they're not going to let this dollar keep popping. Remember, this dollar's also popping because everybody and their brother's afraid that Trump's going to tariff them, so they're trying to kill their currencies to mitigate the cost of the tariffs on their companies. Trump simply will say, I'm going to add a dollar surcharge against you. He won't care. He'll make it where he gets what he wants out of this, Phil. So I think what we're going to see here, Trump gets control of the levers. We're going to get that pop. And look, I think Bitcoin can make a new high. I don't think the market can make a new high, just because Bitcoin has less things that can manipulate it once it gets on the train. But I'm convinced Dow, SPY, small caps, oil have all hit their highs, and I think today with oil was a hurrah. In fact, I shorted oil today, and you know how much I love energy, but I actually shorted oil today, and on a $3 move, on a political move by the Biden administration, that'll get absorbed. And then one of our subscribers is in the industry, pointed out that there's been a lot of refineries and a lot of capacity that's been offline. That's all going away too. So we're going to get a lot more production through the snake, if you will, and I think you'll see that put some pressure on prices there as well. So there you have it. That's what we're going to do, and I think it's starting to happen today. I'm watching the market as we go here, and it looks like we got MicroStrategy green for a change. It's a weird look here, and I think we're trying to do a turn here on SPY. If we don't get it today, the move down was so big that my usually Friday down, Monday down, Tuesday down for OPEX might have been all front run into today, Phil. So with that, guys, come check it out, tradelikeagenius.com. We got, our New Year special has just been put up out the door, and I think we have a pretty good handle on how to trade this, and our eyes are wide open. We're not as bearish as we come across. We will trade long as we see it, but macro, we definitely going into recession. And if you like data, check out Ed Dowd's blog on Twitter or X. They have data that's coming from the highest sources that said expect a strong recession into 2025, 2026. So it's just not Phil and I out here pontificating. A lot of data is lining up for a long, long recession. Thanks, Phil. You guys have a great weekend. We'll talk to you guys on Monday.
Trade Genius.